Good afternoon, viewers. Sage reporting to you live from 𝐊𝐼𝐴 studio. It's lunchtime here in Sydney, and you know what that means. It's time for the mid-market pulse. Let us zoom our lens on the Australian share market's performance. The Australian shares edged lower in a choppy trade by lunch, led by the sharp selling across utilities and the tech sectors. However, gains in blue-chip miners, Rio Tinto and BHP, capped the market's losses. The S&P ASX 200 was trading lower by 0.14% by the lunchtime, and earlier today the index opened marginally higher, following firm cues from Wall Street, but soon pared the gains due to selling in index heavyweights such as energy company Origin Energy, BNPL giant Afterpay, online marketplace Redbubble and the dairy company A2 Milk Company. And moving on now to the sectoral front, 10 of the 11 sectors were trading in the red zone. Utilities was the worst performer, falling nearly 3%, and the information technology also witnessed a sharp sell-off, dropping 1.55%. Among others, healthcare, telecom, consumer staples, consumer discretionary and energy index were also trading lower. Bucking the trend, however, materials was on its own, the only sector that traded higher, and the gain in the materials space was led by the index heavyweights BHP Group and Rio Tinto, which hit their fresh record highs. And meanwhile, the miner Fortescue Metals was down nearly 2% after hitting a 52-week in the previous session. And on the COVID front, the state of New South Wales reported a decline in the locally acquired COVID-19 cases. The case tally in the past 24 hours dropped to 170 as compared to 239 infections reported on Thursday, and meanwhile Victoria has recorded only 3 new local cases. Let's turn our attention now to the biggest gainers and losers that captured the investors' attention by the mid-market session. Energy firm Origin Energy was the top percentage loser on the ASX, falling nearly 9%. The company has disclosed its earnings to take 2.2 billion Australian dollars hit due to a write-down of its core assets, and some of the other worst performers were the global online marketplace Redbubble, AGL Energy infant formula company A2 Milk Company, and auto retailer Eagers Automotive. And meanwhile, the asset management firm Janus Henderson Group topped the winning chart, rising 7.3%. And some of the other notable gainers were miner Orocobre, coal producer Whitehaven Coal, and the gold miner Ramelius Resources, as well as a real estate investment trust Waypoint REIT. And now, before we look at the shares that are in the news today, it's time for a short break.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
sectoral coverage or industry news,
we cover it all on our news segments.
Be on top of the latest news
with 𝐊𝐼𝐴 TV.
Welcome back, viewers. You're watching 𝐊𝐼𝐴 TV. This is Sage, your host, and you're watching the show, the Mid-Market Pulse. Let us now look at the ASX stocks that grabbed the headlines today. Shares of the payment solution provider EML Payments were trading 1% lower at $3.59 Australian by the lunchtime. The company said it had secured a contract from the Northern Irish government to provide prepaid MasterCards worth £100 to every adult in the country. The company is yet to issue an official statement on the development, and this came at a time when payments and gift card business face an investigation by the Irish regulator in connection with compliance issues. Also making the news, buy now, pay later business Sezzle dropped 4%, down to $7.78 Australian after releasing cash flow reports for the June quarter. The instalment payment platform has reported 118% growth in merchant sales, and the income as percentage of merchant fees held steady at 5.9%. Total customers increased by 95.5%, while the active merchants count rose to 40,200. And next up, shares of lithium and iron ore miner Mineral Resources rose 0.5% to $63.77 Australian on reporting quarterly exploration and mining activity reports. The company's iron ore shipments rose 6% compared to the same period last year, and for the financial year 2021, the iron ore production surged 38%. Ampol's also making the news as shares of the petroleum company trading marginally lower, and the company has entered into a partnership with the Australian Renewable Energy Agency. The energy firm has signed a funding agreement with ARENA through the Future Fuels Fund to deliver a fast charging network to support the uptake of the battery electric vehicles in Australia. It will deliver fast charging bays at over 100 sites across its national retail network, covering the Greater Sydney, Melbourne, Brisbane and Perth regions. ARENA will co-fund with a contribution of $7 million Australian dollars to support Ampol's investment. And taking a look at the banking space, National Australia Bank's shares were up 0.7% to $25.94 Australian after the lender unveiled a buyback plan, and the NAB, one of Australia's big four banks, to buy back up to $2.5 billion Australian dollars worth of ordinary shares starting mid to late August 2021. And as per the lender, it will buy shares on market alongside its dividend reinvestment plan. The decision has been taken to progress managing its common equity tier 1, the bank's core equity capital, towards its target range of 10.75 to 11.25%. The bank said the timing and actual number of shares purchased under the buyback plan will depend on market conditions and the prevailing share price and other considerations. And meanwhile, another lender, Commonwealth Bank of Australia, has released an update on changes in financial reporting. And the CBA said that its full year earnings report will include changes to the reporting format, including adjustments for software as a service implementation cost being applied retrospectively, and the ongoing fees to access cloud-based services will be treated as operating expenses. The share price of the Commonwealth Bank was up 0.25% to $99.69 Australian. Taking a look at the shares of AMP now, they fell over 1%, down to $1.05 Australian on reports of legal action against the financial services company. And the Australian Securities and Investments Commission has started civil penalty proceedings in the federal court against 6 companies of the AMP, alleging these entities charged fees for no service on corporate superannuation accounts. The regulator claims that these AMP companies have charged advice fees to more than 1,500 customers, despite being notified that those customers were no longer able to access the relevant advice. And ASIC claims that AMP secured more than 600,000 Australian dollars as the advice fees from involved customers. And moving on, resources-focused royalties business Deterra has released quarterly revenue updates, and the total royalty receipts for the June quarter stood at 54.9 million Australian dollars. During the quarter under review, it generated iron ore revenue royalties of 52.8 million Australian dollars and capacity payments of 2 million Australian dollars from the mining area. 𝐊𝐴C. And next up, the shares of Bubs Australia fell over 2%, down to 45 cents, after the goat dairy products producer released the June quarter results, and the infant formula merchant reported improvement in gross revenue on a quarterly basis. But it still declined on the prior quarter due to fluctuations in demand caused by the COVID-19 pandemic. The fourth quarter revenue rose 8% quarter on quarter, while it dropped 4% on the year-on-year basis. And for the full financial year 2021, the gross revenue fell 24%, reflecting prolonged COVID-19 disruptions. And the total export sales to China dropped by 4% on prior quarter, while the sales to other international markets surged 224%. And taking a look now at shares of Origin Energy tumbled nearly 9% after the energy company disclosed its earnings to take a hit due to write-downs of its core assets. It expects to recognise a non-cash post-tax charges of 2.2 billion Australian dollars in its earnings for financial year 2021, driven by write-downs in its energy markets business and a deferred tax liability. The company will announce its results in August. And lastly, the share price of medtech company MedAdvisor climbed 1.5%, reaching 33 cents on signing a deal. And the company has inked a 5-year agreement with pharmacy wholesaler Australian Pharmaceutical Industries. And on the other hand, following the announcement, shares of Australian Pharmaceutical Industries dropped nearly 3%, down to $1.40 Australian. Thanks for joining us on that report. Hopefully it was of good use to you. That's all for now. And please stay tuned with Kalkine TV for more live market updates. We'll be back with more on the news and the markets, economies and diverse themes and sectors. Sage signing off.